What is happening with interest rates? How is the election impacting the housing market? Is it time to get off the sidelines? We're going to talk about all of that in the October 2024 market report. I'm Jeff Harrell with JJL Realty Group and moving to McKinney. Ooh, I say that again. Moving to McKinney.com. We're going to talk about all that and more. Let's dive right in. Okay. October Market Report 2024. Always like to talk about why people move. Here are the top 10 reasons why people move. And you may be wondering, hey, is it time to move? Is it time to get off the sidelines? We're going to talk about all of that. Maybe you're ready to move closer to family. Maybe you're wanting to cash out and get a little equity out of your home. Maybe you're downsizing and don't need as much room. Maybe you're empty nesters like myself and want a little less room, maybe one story instead of walking up the stairs all the time. These are the top 10 reasons to buy. Is it time to get off the sidelines? Interest rates have kept people on the sidelines either because they don't want to give up that great mortgage rate that they have, or they don't want to buy and get that 7% interest rate sitting on the sidelines. We know it's coming. A frantic market is coming. When and how, and is it time? We will find out. Let's talk about from a national perspective. What does the 2025 housing market look like? We're going to talk about what the mortgage rates are doing right now. We're going to talk about total home sales, and we're going to talk about home prices. Let's dive right in from a national perspective. Mortgage rates, you probably heard the Fed cut the rates by 0.5%. Did mortgage rates follow? Not exactly. We saw interest rates actually go down for a bit, go back up for a bit. As of today's recording, they're at 6.68 for a 30-year mortgage. That's keeping people on the sidelines for the most part. We're starting to see a little bit of activity here in Q4, but not like we're going to see once the interest rates really truly start to trickle down. Here is a quote from Ralph McLaughlin from Realtor.com. We expect the economy to land softly and housing inventory to continue to recover. This should put downward pressure on mortgage rates this fall and winter and will set the stage for a much better season for home buyers in 2025. So we're expecting 2025 to be a strong housing market. Does that mean Q4 will not be? Not exactly. In fact, our business is picking up quite a bit, but interest rates are still higher than a lot of people like. The election is coming up. Uncertainty also causes people not to act. And the jobs report caused interest rates to stay a little bit higher than what we even thought. Well, let's talk about that a little bit. This is from Greg McBride. He's a chief financial analyst for Bankrate. Fed interest rate cuts in general will bring about lower mortgage rates, which is a definite boost in the housing market, but it will not happen overnight. When will it happen? Let's talk about that. So Q4, here's the expectation for mortgage rates in Q4. They will go down if you average Fannie Mae, MBA, and Wells Fargo. In Q4 2024, we're expecting 6.18. Q1 of next year, right below 6. I think that's going to be the sweet spot. Once you start to see mortgage rates start with 5.98 or whatever, but start with 5, I think that's when you'll really see lots of activity. We're expecting that to happen in Q1. Q2 trickles down even more. Q3 down to 5.78. And this time next year, we should be in that mid 5 range. And then here's just a line chart that shows you where we've been. I don't think we'll ever see the rates we saw back in 2020, 2021. Obviously, huge increases in rates in 22 and 23. We peaked in Q4 of last year, dropped down, went back up again. You can see we're looking now. I think we've hit the top. We're starting to see that curve now downward in a good direction. Won't go down to where it was before, but we believe it will be in that 5% interest rates by Q1 of next year. Here's Charlie Dougherty he's a director and senior economist with Wells Fargo. Lower financing costs will likely boost demand by pulling affordability crunched buyers off the sidelines. That's what we're talking about a lot today is it time to get off the sidelines? What will cause people to jump into the market? We know there's pent up demand for houses. We know there's pent up sellers in the market waiting for those rates. They don't want to give up those great 2 and 3% rates. But lower financing costs, i.e., lower mortgage rates, will boost demand. Here's what people said. This is some statistics from Keeping Current Matters. More than half of home buyers would be motivated to buy, these are buyers, with rates under 6%. So again, I think that magic number is something starting with a 5. 52% of people said once rates go below 6, we're in. What about sellers? Well, they said once rates go below 6, we're going to sell 35%. 30% want to see it under 5. I don't think we'll see that. And again, well, we may see that, but not next year. And there is no rate that would make me feel comfortable. They've got that great 3%. They don't want to give that up. They're not going to be in the market. But you can see 35% of people said once it gets under 6, we're jumping in. What about home sales? Nationally, you can see starting in 2019, 2020, 2021 was the peak, 6.9 million homes sold. Then we started to see a decline, 5.7, 4.8 in 2023. This year it's projected to be 4.7. I think that's the bottom. I think most people feel like we have hit the bottom and we'll start to see that go back up in 2025. Here's what they're saying. This is an average of the 3 that you see here from NAR. 5.4. So remember 4.7 in 2024 and 2025. Seen that those housing sales go back up at 5.4. So things are looking up. Things are looking good for 2025. Now here's always the question, should you wait for the spring when we think things are really going to start picking up? Or should you move now? Waiting until next spring or summer should also give you more inventory to choose from, but you'll likely be up against greater competition since it's peak buying season. So it's always that quandary, less competition now. Maybe, you're going to pay a little bit more in your mortgage rates, maybe a little less for the house though, because you don't have that frenzy. Do you wait until next year when you may have more inventory, but you may have more buyers as well? And so it's a tough decision, and that's why you need a good realtor to help you navigate that. Let's talk about home prices. Okay, where are they now? You can see this is home price forecast. This is a percent appreciation. So what most people see is a pretty wide range, but for Moody's at 0.3%, basically flat in 2025, to Goldman Sachs, who thinks we'll see about a 4.4 appreciation in housing prices. That's much lower, though. If you remember 2021, 22, you were seeing a lot higher than that, 40, 50% in some areas. But nationally, we think that you'll see appreciated housing prices go up about 2.6%. If we're looking at the average of all of these experts. From Lance Lambert, he's a co-founder of Resi Club. Even if the average national home price forecast in 2025 is correct, it's possible that some regional housing markets could see mild home price declines, while some markets could still see elevated appreciation. That has been, after all, the case this year. This to me makes obviously a lot of sense. There's some markets where people are moving out of. You're going to see those housing prices flat or even declining. Other markets like we have here in North Texas where people are moving to, you're still seeing some pretty strong appreciation in terms of housing prices. This is from Selma Hepp. She's the chief economist at CoreLogic. Currently, economic projections for 2025 are also positive, which points to a positive outlook for the housing market. We are bullish on the housing market in 2025. Now let's look at McKinney. So that's national. So we talked about mortgage rates. We talked about home sales. We talked about home prices. what's going on in McKinney and Collin County. Well, you can see the total listing count in September of 2024 was 1,208 listings. This would be the total numbers of houses for sale, active and pending listings per month. So we flattened off a little bit. This is pretty common. You see a spike or a rising in the summer, when the spring and summer, when the activity is typically pretty high, and then Q4 it starts to level off or even go down. I think what we'll see this year in Q4 is a leveling off and not a decline. But I guess we'll find out next month. That's what we're feeling, is that we're pretty solid, pretty level in terms of the listings that we're seeing currently in Q4. Active listing count 817 compared to 834. And then these are the new listings. So 314, you can see this is typical. A lot of new listings in the spring, fewer new listings in the fall in Q4. We're leveling off about 314 this year. In terms of median listing price, you can see what it's been since September of 23. We saw a peak in June of this year. It dropped down in July and August and starting to creep a little bit back up in Q4. That it kind of follows a lot of what we're seeing also with some of the interest rate changes as well. The median pricing per square foot leveled off at $222 per square foot. So if you're thinking about selling your home, it's a good kind of rule of thumb to look at. Obviously, it depends on if your home's been updated, what neighborhood you're in, size. Smaller houses will sell for higher price per square foot than larger houses, but this gives you an idea of what the average is across the board. Days on market. So we're seeing a higher days on market here in Q4. Well, why is that? I think that's because in Q4, what we're hearing from a lot of our sellers is, hey, we want to price it aggressively. We don't have to sell. And usually in the summer, you need to sell because you're moving to a new school. You got to get in that new house. And, so you may lower your rate or your price if you're working with a good realtor. Hopefully you've priced it appropriate to begin with. But what we're hearing more and more in Q4 is, hey, let's price it aggressively. If it doesn't move, we know the spring's going to pick up. And so I think we're seeing fewer people lowering their prices if it's not moving. And we're seeing a little bit longer median days on market. And this kind of shows that, right? So in September, we've had fewer homes with price reductions. So people are okay waiting a little bit longer in Q4 to sell their house than they might be in the spring or summer. In terms of home size, median square feet, the average house in McKinney is about 2,500 square feet. That's pretty consistent across the board that we've seen the last several years. And then months of inventory, they say that a balanced market is 5 to 6 months of inventory. In our market, we consistently see less than that. But this is the first time we've hit 3 months. It's still very low in terms of what traditionally you see as a balanced market. So about 3 months of inventory currently in McKinney. But again, I think that's part of that is because people are okay waiting a little bit longer in Q4 for their house to sell. So all that to say, here's our conclusion. While the Fed cut mortgage rates, the jobs market, the election coming up, rates will decline. We didn't see the decline that some people thought we would when the 0.5% rate cut happened. But those rate decreases are coming, and we should see things below 6 starting in Q1 of 2025. Rates in the 5s should start to spark some activity. Inventory is still low in our area. Q4, we think we're seeing quite a bit of activity in Q4. It should be active, but not frenetic. I think that's coming in the spring. 2025 projections are all positive. And again, though, use a realtor to help you navigate this market, to help you understand when the best time to sell, when the best time to buy, depending on what it is that you are looking for. And you can always set up a consultation, a free consultation with us. Go to, I don't know what happened to this slide, but www.movingtomckinney.com. You can set up a free call, and we would love to walk you through all of these types of decisions. And like I said, we started to see a pickup of activity. We think the things are looking up. We also think the spring and summer of next year will be really busy, but Q4 should be pretty strong as well. So with that, thank you so much for jumping in and listening to the October 2024 market report, and we'll see you next month.